Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Red Cloud Financial Services. I'm Mark Bunting, the host of RCTV. Thank you very much for joining us today. Thank you very much for your patience. We had some technical issues, as you know, but we are good to go now. We'll also be taking questions for our guest, Sean Boyd. Put them in the comments section on the right-hand side of your screen, and we'll get to as many as we can toward the end of the show. Now, our guest, as mentioned, Sean Boyd, the longtime employee, let's call him, and chair now, of course, for several years of Agnico Eagle. He's been with this company for about 40 years now. And when he took over, it had a market cap of about 400 million. Now you're looking at 83 billion Canadian in market cap for Agnico Eagle. Not surprisingly, long overdue. Although probably he had to wait a few years to actually be inducted. But Sean is now a member of the Canadian Mining Hall of Fame, inducted just this year. Without further ado, let's bring him in here. Sean, belated congratulations on the induction. Thank you for your patience today, and thanks for joining us.
Yeah, thank you very much, Mark, and it's great to be here today.
All right, very good. I'd like to start with gold. We'll get into Agnico Eagle. We'll talk about the Arctic, and I've got a few personal questions for you as well, which I'm curious about. We'll get to those later on. But with gold, you said that the world, after many years of relative order in terms of fairly benign geopolitical risk, low interest rates, low inflation, you now say we're in a situation where it's disorder globally, and that puts gold in a unique situation. So can you elaborate on those thoughts?
Yeah, absolutely. So it's not surprising that, we find gold shining here as we've moved from, as you say, decades-long period of low inflation, low interest rates, relative calm in financial markets, and relative order in the world. We've moved to a period of uncertainty, instability, let's say, and disorder, and generally those are times when gold's store of wealth, its role as a hard currency, really allow it to shine and get investors much more interested, and that's the period we're in now. When you're in a period of relative calm and order, gold's a nice to have. When you're in a period of disorder and instability and uncertainty, gold's a must have. And I think we're seeing gold in that period that it's a must have, and not everybody's figured that out yet. So there's still a lot of upside there.
Now, Sean, you may have seen a survey that was done recently by a group called the Official Monetary and Financial Institutions Forum, and they surveyed 75 central banks, 40% of which said they plan to be buying gold in the next few years' time. So we've seen record buying by central banks in the past few years. I'm wondering, what is that telling us, and how much of that has to do with a move away from the U.S. dollar for various reasons?
Yeah, I think a lot of it has to do with diversifying central bank reserves away from the US dollar. I think what's interesting, the World Gold Council also did a survey of central banks. The participation rate was really high. And I think what came out of that survey, and there's similar surveys, is that the central banks of the world still see gold as a very strategic asset. But I think what's also important, other than the central banks saying they'll increase their purchases of gold or the percentage of gold in the reserves, 74% of those central banks anticipate a moderate or significant decline in the US dollar share of central bank reserves. So I think that's both parts of the equation. And I think this is what the survey also showed is this is particularly true of emerging market and developing economy central banks. So I think a lot of it has to do with the move away from the US dollar. And but I think if you sort of step back and look at how this has unfolded, particularly from the Chinese, I think it was around 2010 that they opened up their market for the importation of gold for the first time. So they saw this coming, obviously, and they've been one of the principal buyers. So again, not surprising that this is happening. But I think along the same line is what is even more telling is not only do these central banks want to own more gold, but they want their physical gold present in country. And we're seeing a move along those lines over the last few years as well. So that shows you that they're risk averse, they're unsure about the future, and they want more gold and they want it physically close to them.
So having said that, Sean, we have gold near all-time highs, shares of Agnico Eagle near all-time highs. So heady times right now, but we still haven't seen generalist investors meaningfully involved. And you could still argue that there is a disconnect between the price of gold and gold stocks, even though gold stocks have done a lot better. And we really haven't seen a mania of any sort just yet. So how would you describe the current environment? I know you see 5,000 on the horizon. What are the factors that would get gold there?
Yeah, I think there's still, as you say, there's no mania. I think when you think about 5,000, it seems like a stretch. It seems almost in a way, if you think about it relative to where we've been over the last 20 years, a bit of a crazy number, but it's only roughly 50% from the current price. So not a crazy target. I think what you'll see, certainly on the gold equities, which haven't, they've performed, but not what you would expect, given where the gold price is. I think you're going to see continued dramatic increases in cash being piled up by gold companies, more net free cash flow. I think that's going to hammer home the message that these are high quality businesses that you need to own. And they're the best way to actually play the gold price move because you're getting underlying high quality businesses that give you good leverage to the gold price. So I think slowly people begin to realize that there's a good solid floor under the gold price, largely from central bank buying, and you'll continue to get uncertainty and disorder, we feel, and that'll be a driver to have people want to own gold. And I think another angle of that, if you look at the cryptocurrencies, the stable coins, there's lots of talk about some of those wanting to be gold backed. So again, that points to the importance of gold in investors' portfolio and in the overall financial market. So I think it's going to continue to do extremely well.
Sean, as far as Agnico Eagle, many years ago, you helped to institute a three-pronged mission, which essentially is above average returns for shareholders, a strong culture, making Agnico a great place for people to work, and community involvement. And you combine that with another part of the strategy, which is low risk, low debt, low cost as well. So how would you say that you and the team have been able to consistently achieve all of those things and consistently execute to achieve terrific results?
Well, I think a lot of it is focus and discipline. So we laid out the mission statement decades ago, and that's how we would sort of define success for us, as long as we deliver for those three major core constituents, then we would define that as having built and run a successful business. But the view we always took was that mining's tough enough. It's a risk business. You're dealing with a lot of unknowns. You're dealing with nature. So it was important to keep the other risks in the business low. So we've tended to have low financial risk. Our cost structure has tended to be better than the industry average over time. We've avoided political risk. And the way we looked at it is that we sort of viewed it all as a bit of a risk spectrum from an investor perspective. And it's really about how investors perceive risk. They want exposure to gold, but they want it in an envelope that is not high risk. So we always wanted to ensure our business was as close to the gold bar as we could make it, given all the other risks in mining and those sorts of things. So it's been a consistent focus on keeping the other risks low and focusing on taking geological risk. And we found ourselves to have an extremely good team that was able to see through risks and not let their view of risk cloud the opportunity. And we had a team that had really good vision on the geological upside, a lot of opportunities. And when we saw that, we moved quickly to secure those opportunities. So really disciplined and focused. And we've kept the business simple. We've kept the complexity out as much as we could. And a big part of that was so that it was easy for our employees to understand where the business was headed, to feel a part of the business, and appreciate where they could contribute on the execution for the strategy. And we felt it was also important to keep it simple so our shareholders felt comfortable with the strategy and have trust in the strategy. So that was the general formula.
Well, it's a formula that has definitely worked and made shareholders very happy over the years. Let's shift to a strategic Arctic mining plan in Canada, which you say is imperative. So if it's done right, what would that look like in, say, 5 to 10 years' time, to the point where it's sustainable and we could have a multi-decade impact in the North?
Yeah, it's extremely topical given what we've seen over the last few months with the U.S. administration, their interest in Greenland, their interest in Canada, forcing Canada to sort of take it upon itself to take advantage, maximum advantage of the opportunity. So it's really more of an all-encompassing strategy for our Arctic. And us at Agnico have been sort of out there for years talking about the need for a plan of action in the North, and that was just based on what we were seeing in our business day to day, going back almost 20 years. So mining can play a really important role in that overall strategic plan to develop the resources of the North. And it's interesting how we're finding, us in particular, Agnico, having the mining skills and the relationships and the Arctic experience, and it's not just in Nunavut, it's in northern Finland, to actually play an important role. So the plan must be coordinated, but it must be a plan of action that we not only build infrastructure, um, and we build out industry, but we also build and uplift communities. So it's a comprehensive plan. So what does it look like? Well, it's not going to be easy. Industry has to lead, in our view, because industry is in that unique position that we can get things done a lot quicker than governments can. We can get things done a lot cheaper than governments can. And so it's on us to, work closely with the governments, let the governments understand what we're able to do and what we're willing to do in the North in terms of building out our project pipeline. And those discussions are ongoing and have started. So I think we're going to see more resource development in the North. We're going to see more infrastructure, based on what we're hearing out of the government. We just got to make sure that's coordinated so that we get, maximum benefit for the dollars that are being spent over the next several years in the North. But it will take time. It won't be easy. And I think it's important that the expectations are properly set. I think the government, not just the Canadian government, but the US government have high ambitions around the development of critical metals deposits. Well, the reality is that's not going to happen overnight. So I think we have to be patient, but we have to get to work, and we have to get to work now on infrastructure investment, social infrastructure investment in communities, and resource projects moving forward as quickly as we can get them moving.
Right. And you said, Sean, that governments need to work together. They need to invest in the north. So are you encouraged by what you're hearing from the Carney government about the impetus for new infrastructure, new projects? Do you think from what you're hearing, is there a focus on the north?
Yes, it's like night and day. So as you mentioned, I've been doing this for 40 years, and up till about 3 years ago, I basically spent no time in Ottawa. I think I went 2 or 3 times. We just basically built this business without sort of needing much from the federal government. But over the last 3 years, we were going, and I was going in particular, really to make sure the government understood what we were seeing as the opportunity that existed in the north, and particularly around the Hope Bay project. So, in the last couple of months, we've had direct contact with new members of the government, and it's refreshing because it's more about what can we do, and how do we work together. And so if you look at the history of the country, we've been talking about the north for decades, without much getting done. And I think we all realize now that it's a huge opportunity to, as we said, not just invest in projects and in infrastructure, but also to invest in communities, because it's about sovereignty, but it's about effective sovereignty, and effective sovereignty is about presence, and presence is really about strong communities and prosperous families within those communities. So we have to, put it together, connect the dots. Industry can lead. We can work side by side with communities and government. But I'll just give you one example. We've been sort of discussing over the last 3 years the need for the Department of National Defense and industry to sort of understand what each other is doing and what the plans are. And we would use the example that the Canadian military should know where the best rocks are in the north, because that's likely where the future mines are going to be. And if there's a way to sort of coordinate infrastructure, because generally they're both using big infrastructure, then we can be much more efficient in how we do things. And we've had, preliminary and early discussions over the last few weeks with senior members of the Canadian military on what our plans are at Hope Bay, what our future plans around Meadowbank may be, depending on the mine life there, and wanting them to know what we're thinking and where we see the opportunity set, and wanting to know a little bit about what they're thinking about really what we can do from a logistical standpoint, from a procurement standpoint, to help them accelerate, their plans to put in infrastructure in the north. So it's early, but it's positive, and it's a good sign. Another good sign.
So to use the baseball term, innings, what inning are we in Canada in terms of forging this Arctic mining plan? The first or second inning? And when you say it's not going to be easy, it's going to take a while. Do you have a rough time frame? I know you can't pinpoint that, but how long before it's we have meaningful development, meaningful production from the north?
Yeah, I would say, second inning. But I would say the first inning was very long and painful. I would sort of say maybe it was the pre-pitch clock type of inning where there's lots of foul balls, lots of disputed balls and strikes, pitchers and hitters getting ejected. It's been painful. But I would say second inning because there's a lot more to do, and there's a lot of potential. But it's going to take long-term thinking, but it's going to take short-term action. So I think it's the action. I think the Prime Minister was asked about specific projects that they're focused on. And one project he mentioned was the Grays Bay Port and Road Project, which is Western Nunavut, which would be a physical connection by road to the rest of Canada, ending in a port on the Northwest Passage. So if the Prime Minister is mentioning that as one of the first projects when he was asked the question about what projects are they thinking about, that's a good sign. And we're the biggest road builder in Nunavut. I think we've built 250 kilometers of roads. There's more roads to build. Ports are really important. Ultimately, we need a fully developed Northwest Passage along the lines of the St. Lawrence Seaway. That's going to take lots of time, but that's where projects like the Hope Bay project come in. because that's one that we're working on it now. We're advancing infrastructure spending. We haven't completed all the technical studies, but based on our experience, that's a mine that can be around for lots of years, and right on the northern coast. So there will be development, there will be projects going, but we need some early wins to demonstrate that we're serious about developing the north. So Hope Bay is is an important project to not only get built, but to send some important messages.
That was my next question about Hope Bay that you were touching on there. That is a part of Agnico's contribution to the north as you develop that. Can you give us any updates in terms of how things are progressing?
Yeah, and I think it's the backstory is really important because it encapsulates how projects need to move forward in the north. And the history of it was that it was very close to be owned by a Chinese mining entity, and our federal government said for national interest it was better if the Chinese entity did not own it. And Agnico picked it up a few years back and negotiated over a 2-week period to get it. So, given the fact that it was almost in sort of foreign hands, and the fact that it's now in Canadian hands, and given the fact that we've been drilling it for 3 years, and we've been able to prove our theory as to why we bought it, that it was going to be a bigger deposit, meaning that we could likely build a bigger production platform. That's where it stands right now. And so, based on our Arctic experience and the size and scale and capacity of what we can do, that project's tailor made. But it's interesting how this project could be the lead project to be announced in the far north that it's moving forward, because it will be important to move that particular project forward, because it sends a message to our northern communities and our northern partners that significant investment dollars are going to be spent building out production platforms there. And I think that one is in a physically important location given it's on the northern coast. So we're positive on it. And as we've been explaining to the government over the last 3 years, it ticks so many boxes in terms of government policy, whether it's northern development, whether it's Arctic sovereignty around presence, whether it's indigenous economic reconciliation, whether it's using sustainable energy, because there'll be several wind turbines there providing some of the power. It's a perfect project to get things kickstarted in the north and send a strong message to not just our northern communities, but fellow Canadians, our allies, and our adversaries that we're serious about developing the north.
Sean, as far as Agnico Eagle strategy, one of the things that the company does is invest in other mining companies such as Foran Mining, ATEX, Collective Mining, and there are many more. So when you and your team are assessing an investment, is the criteria similar to what you're looking for generally at Agnico? Again, it's the geology, it's people, it's community, it's the jurisdiction. Is that fair?
Yeah, we've built the company by following geology. And in some instances, we've taken strategic investments to test location largely, and to get a better feel for the geology. And so the screen is geology, it's people, and it's also location. And sometimes we can be a little bit more aggressive in terms of the location around those investments, because it's not really a part of Agnico, but we can invest in them and get a better feel. And we've used it successfully, as you mentioned, Mark, because that's that's how we got Laurent. It was a strategic investment. That's how we got Goldex. That's how we got Kittila in northern Finland, Meadowbank, Meliadine. So we use that strategy to get closer to situations that we thought could have potential, and could potentially be a bigger part of Agnico. In those cases, it turned out that way. In some cases, it doesn't quite work. But we've effectively built a template which is more than just putting up a check. It's a template that offers advice and technical support if asked. And the reason that it's more than a check is because we were that junior not long ago. as you mentioned, if you go back to the late 90s, our revenue was only $50 million. And so we were that small company, trying to get bigger, trying to build our quality. And so we know what it's like, and we know what to look for. And so we'll continue to employ that on opportunities that we think have lots of potential.
Sean, I mentioned off the top your induction into the Canadian Mining Hall of Fame, and some of your colleagues and peers have described you in various ways. That you lead in a quiet way, that you have integrity, you have character, a great business mind, of course, and excellent interpersonal skills as well. So let me flip that around. How would you describe how you've been leading Agnico all these years?
I would probably add pretty persistent and disciplined. We take that long-term view, we take a per share focus, but it's more that as an accountant, I'm trained to sort of understand and focus on the details. But I also sort of understand from that accounting training that you sort of need a sense of the big picture and let people do their job. So it was really more about understanding where the business is at any point in time, given that accounting training, but also understanding where we needed to go and how we needed to go there and let the people do their work. I think the biggest part about where we were early on, let's say in the late 90s, where a lot of us got our sort of bigger jobs, is we were sort of roughly the same age, understood that we had the skills to be able to, do it successfully and build this business, and we just stayed focused on it.
You mentioned your accounting background. Some may know your the backstory for you to get into Agnico. Some may not, but you were at Clarkson and Gordon in '81. Agnico was a client. You eventually joined Agnico in 1985, and so one assumes that no one creates what you've helped to create at Agnico Eagle without having a bit of ambition and a bit of ego as well. So when you started there, how ambitious were you to build a big successful company? What were your goals back then?
Well, they certainly weren't to build a big successful company, because when I started there were 5 people in the head office, and we were a small producer. In fact, my friends over at Clarkson Gordon, a lot of them were leaving to go to Magna, and they would always kid me and say, "Why are you still at Agnico? Like, why don't you come to Magna? You get paid a lot more, and we get a new Chevy Impala every 2 years. So we got a nice company car." I was attracted to Agnico because I really enjoyed the people and I got to know them over the period where I was doing the audit. But certainly ambition. You see as an auditor and an accountant, you get exposure to a lot of big Canadian public companies. Agnico was not that sophisticated. I always said to myself, if I ever had the opportunity and be fortunate enough to get the opportunity to lead the company, I was confident that we had the cultural base and the quality of the people to be really successful. Um, I would say not ego, but really quiet confidence. Again, that the team that was in place had all grown up together essentially. And we all kind of understood that we had the work ethic, we had the skills, we had the trust in each other to be very successful. And also we've used this when we see that our market cap is like 15 in the country, and at one point we got to 11 a couple of months ago, passing Scotiabank. We sort of said to ourselves, boy, if we ever had set out to do this, if the objective was to be a top 15 public company in Canada by market cap, we probably would have blown it. It was really a matter of just trying to be the best and highest quality gold company we could be, and run a successful business that happened to mine for gold. And so that's how it unfolded the way it unfolded.
Right. So you all put your nose to the grindstone, stuck with the process, and the end results speak for themselves. One last question here for you, Sean, from me, and then we'll get to a few viewer questions here. So one of the reasons investors like Agnico for all this time is that you're a pure play gold miner, but you've also said that you're open to diversification. So presumably you have long-term vision, of course, for Agnico. So let's say look out 5 years. What does Agnico look like in 5 years? And could there be some diversification in terms of some other metals that you're producing?
Yeah, so that's a good question because we get that question. We do an annual strategic session and we bring in 150 to 170 of our top people from around the world. And we get that question, off and on over the years. And my answer is always the same. My answer is I'm not sure what it looks like in 5 or 10 or 15 years, but I know what it's going to feel like. It's going to feel like it does today with the strong culture and the focus on trying to do the right thing. Mining is really an exercise in looking for high quality deposits. We've had a successful strategy by staying focused on gold rather than diversify away. Although in our history, we did go through a period where we had 50% gold revenue and 50% zinc revenue because we were producing a lot of byproduct zinc at LaRonde, and we still didn't lose the gold multiple. So I think investors pay us more for our dollar of cash flow than others because they trust the strategy and they trust our willingness and ability to stick to that strategy. Now, having said all that, we are building in conjunction with Teck a copper deposit in Mexico. So we structure it that way as a partnership to lower the risks. It's in Mexico where we have expertise. So we're diversifying a bit. The question comes, given the push for critical metals and given the North American focus on critical metals, can Agnico play a role in that business without disturbing its main business? And so the answer is we will not disturb the main business, but there may be a way that we can launch or structure a small vehicle to start that's involved in critical metals that doesn't take away from our focus on Agnico and the quality of Agnico and the ability to grow that business. The gold business, we believe we can still do it and do it smartly by exploring and developing our project pipeline. So how does it look in 15 to 20 years? There's my own feeling is there's not enough high quality gold opportunities that we can say to ourselves that in 15 years, our revenue mix is what it is today, which is 97% gold. It's probably some diversification, but it would have to be in metals that are relatively consistent with gold, like copper. So we're not going to aggressively venture out into things that we're not comfortable doing and our shareholders aren't comfortably doing or having us doing. And that goes along to that thing we talked about at the start is understanding our risks, understanding how investors perceive risk, and giving them the lowest risk, high quality option to play the gold price.
And just quickly, do you envision yourself still being chair of Agnico Eagle in 15 years' time?
I don't know. That's a tough question. I'm not sure. So, as you mentioned, I started 40 years ago last month in 1985, and I've been going through the front door since mid 1983, starting as an auditor. I really enjoy the company. And as long as I'm enjoying the company and I'm having fun, then I'll be around.
All right, that's reassuring for shareholders. Very good. Let's get to some questions here. Stephen Orell, he says, thanks for joining us. What do you see as the biggest threat and or challenge to miners' performance over the next 12 to 18 months?
Well, I think the focus is not to get, I think, for companies, not to get complacent. Sure, the gold price is high. Sure, there's a lot of cash flow coming in. But there needs to be an important message sent by the industry and that message needs to be one of discipline. That just because gold price is going up, that you can't start the party. You got to stay focused. You got to be disciplined with investors' money. You've got to return more of that money to shareholders, and you've got to reinvest that money in high quality projects. So I think the risk is complacency. I don't think that's going to happen. But I think as investors and shareholders, you should continue to remind your management teams that they need to continue to be disciplined and focused on returns and keeping costs down and keeping risk out of their business.
Question here from Adrian Cantwell. Do you think that the physical backed digital gold asset that the World Gold Council is proposing to launch will result in a significant or insignificant impact on gold demand?
Yeah, I think it's not just that initiative. We're hearing other stable coins and coins are looking to potentially back them by gold. So it could be an emerging trend, which would be quite interesting. So any sort of new source of demand will certainly be extremely helpful because you're not going to see a massive increase in supply. Mining's still very difficult. Projects still take a while to build. So I wouldn't look at any one single initiative. I'd look for a collection of initiatives that could have an impact, positive impact.
Interesting. Emil Boychuk with this question. Jim Anthony over at Seabridge predicts $12,000 gold in about 4 years' time, and he's been quite accurate in his predictions. Does that sound outlandish to you or possible?
Yeah, that's a tough one. We've always been out in front in terms of our projections, but we've never been the sort of 10,000, 12,000. I think 5,000 is reasonable. And I would say you never know with the gold price and the gold space. It used to be crazy. My mom would always say, "Did you see that gentleman on TV this afternoon, John Ing? He's calling for $500 gold." And my mom would think that was crazy when gold was 250. So, anyways, I'm comfortable at 5,000 because that's only 50% of from where we are now. These things can tend to overshoot, though, as we all know. So we could find ourselves surprised, but look at the cash flows that are being generated today at 3,300. I think the realized price in the last quarter for Agnico was under 2,900. So the realized price this quarter will be a few $100s above that, likely, given where gold prices are. So that would have a dramatic impact on cash flows for the industry. So 5,000 would be great. Anything above that also would be a super bonus.
Another one here from Adrian. We talked earlier about central bank buying at record levels. Most gold investors know about that, but interesting angle here. He's saying, who's actually, aside from gold miners, who's actually doing the selling when we see all that central bank gold buying?
Well, it would be the miners. It would be scrap. Would be the large ones. It'd be some investors that are selling into that. Talking recently to a very large international bank who vaults a lot of this gold, they have noted that a lot of the physical has been moved out of the official vaults and moved in country, as we've said earlier on this call. So it's not a one-off here. Things have changed in the world monetary system. The US dollar is still number one, but it's being challenged right now. And I think that's what we're seeing is the need for diversification. And I think, as we said earlier in the call, China started this, making minor changes. I think they've also announced recently that the Shanghai Gold Exchange is setting up warehouses and vaults around the world to attract more gold. So again, the race for physical is on.
Okay, just backing up to another question here. Hold on a sec. Jeff James, will a delay in the adoption of Basel III declaring gold as a tier one bank asset cause a price pause or a deflation in precious metals, or are there so many other factors driving it that it wouldn't?
I think there's so many other factors. I think that's the beauty of where we are right now. Is recall a few years back, gold would pop over 2,000. find its way down to 1800, and there was almost like there was a basket under it. There was a floor under it. So there's a lot of buying sort of under the market here, and that's attributable to a number of factors. And sort of watching this for 40 years, there was always sort of one principal driver when it ever did make a move, and then it would fall back. It was never sustainable. The move was never sustainable. So now you have so many factors that are supportive of gold, and its role as a sort of a monetary asset and a preserver of wealth. And think about it, it's performing extremely well in the face of record high equity markets. So that shows the sustainability of this price, and the support it has and the momentum it has to move higher. So it's a number of factors that are all coming together at once.
A few more here for you, Sean. Josh H. asks your opinion of ATEX Resources. Agnico Eagle invested in that company last year, I guess it was. I looked at the stock chart yesterday. It's been tremendous. So what's your overall view of ATEX? And he loves the fact that smart money got into that company.
Yeah, I think it's like a number of them. We showed up because we were familiar with the deposit, the management. We wanted to learn more, but ultimately it was a decision on the geological upside that attracted us to make an investment and get closer to the management team and understand the plans. And we don't do a lot in South America. It hasn't been a region where we felt we had good skills and we felt we had a good understanding of the opportunity set. We tend to be patient, and we need to go into areas where we can make a case to ourselves and our board and our shareholders that we could build a multi-decade business. So we've got a couple of investments in South America, one in Colombia with Collective, and ATEX in further south. And these are both deposits that are growing, getting extremely good grades. So we'll continue to be supportive of management and try to understand what their plans are and be supportive of their plans. And the other thing is this portfolio is extremely large now, based on the run in some of these stocks, and we've done extremely well with it, which is a good thing. We don't do it to make money by trading these things. We do it to understand opportunities. So ATEX is one that we're closely following in terms of its ability to continue to grow.
A question from Rusty Nail, which presumably is a euphemism or a what's the word, pseudonym, or maybe not. Anyway, what are your thoughts on silver? Would you consider diversifying into a silver producer or a developer?
Well, we started, that's Agnico, silver, nickel, cobalt. We started in cobalt in 1957 with 4 sort of small silver mines. And so we like silver, and silver clearly from a price perspective is likely going to do better. If you're in Mexico by design, you like silver as well. We have some silver byproduct. So silver would be a logical extension to our business if we could find a high quality silver deposit in the right parts of the world where we could see ourselves doing more business around that deposit. We'd certainly be open to that, based on history, but also based on what we see as the potential for the silver price to go higher.
Okay, last question goes to Adrian Cantwell. What is the biggest mistake you've made along the way, and what did you learn from it?
We made a lot of mistakes. Fortunately, they weren't big ones. One thing we did learn is that when we messed up or when things sort of went against us and nature turned, we were a very resilient company. We had the ability to get refocused and work hard at correcting the issue. And I think the other thing we did well, when something did go wrong and we messed up, we didn't hide. We were immediately out on the road trying to explain, what we thought happened and what we were going to do about it. And that was really translated into over, 4 decades or so of having one of the better valuation multiples in the business, because even when things went wrong, we had the ability to fix them quickly. And we were also out there communicating to our investors how we were going to fix it. So we didn't make too many big mistakes, and we're still here after almost 70 years because we've been able to deliver effectively for our shareholders, which allowed us to build a really great company for our employees and to make some really nice and strong contributions to the community. So they all go hand in hand.
Sean, we've gone about 45 minutes or so. You covered a lot of ground for us. You took a lot of questions as well. We really appreciate you being on today. We enjoyed that conversation for sure.
Very good, Mark. Thank you very much. And thank you everyone for listening in. And I'd love to do this again. And, part of the technical issue I think could have been on my end. So we're really good at building mines. I'm not great with computers. So we'll be on time next time. I look forward to doing it again if I could.
Okay. Thanks, Sean. It all worked out. We thank you again. Thank you again for watching and for your questions. We have more live core conversations coming up. I believe next Thursday is Frank Justra. How about that? There's another big name. So look forward to that. Thanks again. Take care for now.